Entre as mais diversas editorias ou temas da cobertura do Financial Times, o principal jornal britânico de economia e negócios, estão temas como empresas, mercados, clima e lifestyle. Parte dessas notícias está organizada em uma newsletter publicada 2 vezes por semana, chamada Dinheiro Moral, com histórias e análises de negócios socialmente e ambientalmente responsáveis, finanças sustentáveis e investimento de impacto. Ou seja, notícias que atendam os critérios ESG, acrônimo em inglês para ambiental, social e governança. A Aberje, que ao longo do ano de 2021 vai dar um tratamento especial ao tema ESG, em suas publicações e eventos, convidou Gillian Tett, que é cofundadora e editora do Moral Money, e co-presidente do Conselho Editorial do Financial Times. Welcome, Gillian Tett. Thank you for your time and interest.
I'm delighted to be part of your show. That's great.
When and how did Financial Times decide to launch Moral Money? And what are the criteria to journalistically cover morality in business and economics?
Well, let me make one thing clear. By calling this moral money, we're not suggesting that we're trying to act like a church or be nuns or any kind of moral superiority or anything to do with religion. Absolutely not. We called it moral money because we were trying to refer to the Adam Smith idea of the theory of moral sentiments. That was a book that Adam Smith wrote just before he launched the idea of free market capitalism and competition, which argued that for free markets to work effectively, you need to have a shared moral framework and a shared sense of society and social responsibility. And for so many decades in the latter part of the 20th century, that part of Adam Smith's ideas were ignored. But I think that in the 21st century, the two halves of what Adam Smith, the economist, was arguing are coming together, and people are trying to put finance and business and markets in a wider social context. I first saw signs that the zeitgeist, the mood, was changing really back in about 2018. And it took us a while to launch Moral Money platform, but we did that in the summer of 2019. And it turned out that our timing was very lucky, because almost from the day that we launched, there was growing amount of discussion in the mainstream media about what's happening with businesses, what are their responsibilities to society. And in the case of the American Business Roundtable, they actually came out and said very explicitly that we're going to look at stakeholders going forward, not just shareholders. And that's another way of talking about a moral business.
It's interesting that you quoted the Adam Smith book, Moral Sentimentals, because I had an interview a couple of years ago for Aberje with a professor and author that quoted that. For a long time, economics and liberalism only saw the profitable and the invisible hand side, but not the moral and sentiments side. You say a little bit, a lot about this in your book, Fool's Gold, in 2009, about the financial crisis. Do you think this ESG revolution is really happening on the basis, or is just a calculation of long-time risks?
Well, I think that what has happened is that we've had 3 phases in the ESG, if not revolution, then the evolution. And in fact, I have a big article which is appearing in the Financial Times this weekend talking about this historical development. I'm also writing another book which will be published in about 4 or 5 months' time, which is talking about this as well. But the first phase of development, which really took part in the late part of the 20th century and early years of this century was that we had people who had very strong moral convictions that they wanted to change the world, got involved in investing to try and do that. So those are people who today might be called impact investors, who are following a very specific path of trying to actively change the world. Then you had people who really came out in the sort of really after 2004, between 2015, who wanted to do no harm to the world. That is what I call the sustainability group, who were trying to not necessarily be social activists, but to make sure they weren't doing damage. Today, I think what you've got is a large group of people who are looking at ESG because they want to do no harm to themselves. And essentially, they're using ESG as a tool of risk management to avoid reputational risks, to avoid employee risks of losing their employees, to avoid customer risk, i.e. they're worried that people won't buy their products, to avoid regulatory risks, they're concerned that governments might clamp down on things like pollution, and also to avoid investment risk because they're worried that assets which are exposed to, say, fossil fuels could lose value in the future. So ESG has become a tool of risk management, not just activism. Some people are still using it as a tool of activism, and I salute them. But we need to be realistic and realize this shift has occurred. And people might say, well, that makes everything totally hypocritical. People are pretending to do ESG to help others, and it's really to protect themselves. But I think having covered actual physical revolutions in my early years as a journalist, when I was a political and foreign correspondent, I know that revolutions happen not when a tiny minority of activists start shouting, but when the silent majority gets swept along. And I think that's really where we are at the moment with this tipping point. And in some ways, that's actually a huge victory for the original activists.
What kind of initiatives or projects results are you expecting to find at companies when covering ESG and moral money issues? And what are the standards that you expect the companies to overcome?
Well, the first thing to recognize is that the concept of ESG was really only launched in 2004. Before that, companies were doing good, but they had it ring-fenced from their main operation in a department called corporate social responsibility, or social responsibility, or even philanthropy. ESG is really about bringing those ideas into the core of the business. So the first question is, well, are you treating ESG as just a kind of sideshow in a separate department, or does your chief sustainability officer, your head of ESG policy, actually sit on the board or have a direct line to the board? First point. Second point is, are you introducing metrics to look at this? Because there's all kinds of metrics you can use, like accounting standards. There's the SASB, TCFD, GRI standards. There's internal standards, but to what degree are you actually measuring your impact? To what degree are you actually telling investors and customers and consumers about it? A third question is, are you just measuring your own impact, or are you looking at your entire supply chain and the other operations you're involved with? Because increasingly the debate is moving from looking just at you to looking at the wider environment and chain reactions that you're involved with. A fourth question is, are you having external auditors coming in and talking to you about this or not? And to what degree are you actually making yourself open to scrutiny by employees, customers, etc., etc.? And the fifth question really is, how are you balancing off the issues of E, environment, against issues of S, society? Because that's not easy. And I can't stress it strongly enough. I think in the first wave, when it was primarily activists who were involved with ESG, there was an idea that you either had saints or sinners. Companies were either completely green or completely dirty. The reality is that's wrong. Life exists on a spectrum. And I often prefer to talk about an olive spectrum in the sense of green and brown being mixed up as a color rather than just green and brown as a binary distinction. And I think increasingly people are realizing that the issue right now is not to suddenly expect brown companies to turn green overnight, but to push them along that olive spectrum.
Larry Fink annual letters have become very quoted in ESG articles for the past 3 years and have shaken this market too, because of course he is the CEO at BlackRock, the largest investment management corporation, and especially because he's proposing to change the logic of Milton Friedman, defended 50 years ago in putting stakeholders' interest before the shareholders' interest. You mentioned this in this first answer, Anna. The Business Roundtable commitment also did the same in 2019, inverting its own commitment of more than 30 years ago. So clarifying clients, employees, community, providers, and investors' interests before the profit. In most countries like Brazil and United States, ESG is a self-regulated market. So what are the challenges to make those commitments happen for real?
Well, the first thing to say is that they're not arguing that the interests of other stakeholders should be before shareholders. They're actually arguing that they should be regarded at the same time. And one of the huge distinctions today is that insofar as failing to meet ESG norms can essentially create a rebellion amongst customers, amongst employees, and create regulatory and investment risk. Actually, today, the idea of looking after ESG is actually enhancing shareholder returns in many cases, not just actually being seen as a reason to sacrifice shareholder returns. And it's very important to stress that because, in fact, Larry Fink came out this week and said that 81% of sustainability indices had outperformed the mainstream ones in 2020. And that may be a fluke, but if that carries on, it suggests that actually you're not sacrificing returns by being sustainable, you're sacrificing returns by not being sustainable. It raises questions about greenwashing and monitoring and, as you say, trying to get some oversight, given that this business has been self-regulated until now. So the bad news is that there is a certain amount of faith and trust involved. The good news is that there's an enormous amount of energy around developing accounting standards right now. And perhaps most importantly of all, digital transparency is giving employees and customers and, of course, investors a way to look at what's going on quite often. So it's possible that actually the external scrutiny will end up being one of the most important drivers for pushing this movement forward.
Brazil has a major opportunity in agribusiness. How to seize it in the best and more profitable way, and how Financial Times is seeing the Brazilian agribusiness image?
Well, there's obviously been a lot of controversy in the last couple of years around the Amazonian rainforest and about the cattle that are being essentially extended in terms of farming across the area and the damage that's doing to the environment. So the first point to make is that consumers are very, very aware of those issues. And I would predict that there will be rising pressure on companies in the agribusiness to show that they actually are being sustainable. And that applies even to things like soybeans and things like that. I'm keenly aware that Brazil has been, enjoying a big boom in terms of the Chinese market for something like soybeans. And thus far, Chinese consumers are not particularly fussy about the sustainability issues, but that could change as well. So I think there absolutely is a growing focus on these areas. Agriculture was ignored in the first wave of environmental activism. It's coming up the agenda and is a source of focus increasingly. So my main message to the agribusiness would be to be aware this is coming down the tracks and try and get ahead of the curve and start thinking about how you're going to respond now and both communicate your message to consumers if you are making sustainability moves, but also make sustainability moves in a hurry if you're not. And that may require some very difficult choices, unfortunately. However, I would point out that companies which are ahead of the curve really can enjoy a consumer boost. I mean, one of our big stories in the Moral Money newsletter this week is about Natura. That's become, under most measures, the world's largest B Corp. You know, they are absolutely ahead of the curve and showing very clearly what can be done, not just in Brazil, but on the global stage, by basically understanding where the zeitgeist is going, getting ahead of it, communicating well, and I hope having values that actually they're trying to put into practice.
Fake news, infodemics, and democracy were the main subject of the last Business Communication magazine edition published by Aberje. Are there a lot of fake news in ESG topics, or maybe ESG washing? And how much risk it may cause to a company's or a brand reputation?
There absolutely is a lot of, if not fake news, but there's a lot of gossip, speculation, a lot of discussion about what's happening. And that is true of every area of modern business world. I think companies need to be aware of that. They need to recognize that, as the Edelman Public Relations group pointed out a little while ago, there is the reality today that if you as a CEO think that you can put out a statement and that will be taken as the Bible and the source of all truth by the outside world and your employees, think again, because the reality is that lateral communication through social media is as important in terms of how a company's message gets out and its image gets out. So, I mean, I guess the most important thing to say is that fake news is there. Companies need to be aware of it. They need to make sure they have plenty of real news that they can actually talk about in relation to that, but also be aware that there's a tremendous amount of scrutiny and, you know, oversight created through the wisdom of crowds, particularly the wisdom of crowds armed with social media.
I have two more questions, Gillian. When you started to cover ESG topics, could you comment on how much the investments have grown on those topics compared to how much the ESG risks have grown?
Well, basically, the amount of money invested in ESG has exploded. That's just the reality. And it exploded quite dramatically. So, you know, that's just the reality. It's very hard to measure because definitions of ESG vary. But, you know, I spoke to Anne Finucane of Bank of America the other day, who reckons that 40% of the $110 trillion worth of investable assets are now being invested by some kind of ESG mandate. So let's say very roughly $50 trillion worth. And that's, you know, was up from almost nothing at the beginning of the century. So the investments have risen dramatically. The risks in terms of climate risks and dangers are absolutely rising, and that's, you know, can be seen in the science. The risks in terms of the social backlash over things like Black Lives Matter, #MeToo has also risen because people have become more adept at using smartphone technology and internet to launch protests. And I think also you can say the risk in terms of investors moving away from stocks that they don't like has also grown exponentially. I mean, just look at what's happened to the oil and gas sector in 2020. And that's partly due to the economic downturn, but it's also largely because investors turned around and said, we're not going to touch those stocks. They're seen as being risky in this new ESG climate. So it's happening both ways. But the thing I want to stress is that they say that Wall Street's driven by fear and greed. Well, the fear factor is absolutely at work right now in terms of driving ESG and risk management. But the greed factor is too, because I was talking to Mark Carney earlier this week, the former governor of the Bank of England, who's now running the COP26 program. And he pointed out that climate change is the biggest investment story of our generation. Whoever finds ways to invest in climate change, products, technology, or invest in people who are making those investments is going to be a winner. So it's not just about fear, it's also about greed. Or to use the Wall Street phrase, the profit motive.
ESG topics, especially for the E-letter, the environment issues, are being discussed for more than a generation, decades. Many people are sensing or maybe thinking that is already a mainstream topic. But if we analyze by the money perspective, the investments, like as we speak before, the consumer choices and academia perspective, let's say in business and economics schools, can we say environment is a mainstream topic? And how many decades do you imagine it will take to social and governance topics might evolve and be as mature as environmental topics are now in business and society? Do you have ideas of how we can accelerate these social and governance topics?
Well, somebody like Larry Fink would say that what's going on is essentially something similar to what happened with tech. And if you go back 20 years, tech was a specialist topic that sat in a special department in a company, and the only people who needed to know about it were the tech experts. And people on a corporate board or on a public relations team wouldn't expect to be experts on tech. You even had special tech companies. The FT had a tech desk, which was kind of separate. Now, nobody can be in business without knowing something about tech, because it's just kind of part of our lives. It doesn't mean there's not still a specialist tech department, tech office, but it really is embedded in everything. And I think that's probably the future of sustainability. You know, that eventually it's going to come to a point where all companies, all board members, all public relations executives, you know, all consumers need to know something about it. And that's really why we created Moral Money. We were the first mainstream media group to do this. And we created this platform, which really went out and said, okay, you may not know a lot about this world of sustainability and ESG and all these acronyms. You know, you might think, oh my God, yet more acronyms and jargon. It irritates me madly. It's so do-gooding. You know, how are we going to cope with any of this? Well, what we're trying to do with Moral Money is provide, if you like, a smooth, easy, gentle route to start to understand these issues and really take them out to a mainstream market. We're not writing for experts. We're writing for the general FT, you know, audience, well-intentioned, interested, but not expert. So we use a lot of humor. We try and keep it very simple and short in the newsletter and just reach out and explain to people. That's what we wrote about, say, with Natura today. And the question of S is absolutely an issue, because E can be measured in a way that S can't, or not as easily. E, you can track carbon emissions. You can create a carbon price. You have very specific things you can do. The S is a lot more slippery, but they are both being taken hand in hand right now. And so although I doubt whether S will ever have the precision of the E, it definitely can't be ignored.
Great. Thank you very much for your time in clarifying those very important questions, and have a great work.
Thank you. And can I just say, in the first iteration of Moral Money, when we first started 18 months ago, hand on heart, we didn't write much about Brazil. We're actually increasingly looking at all over the world. We've had a number of pieces recently about Brazil. I think Brazil is absolutely fascinating. And I think we're hungry for stories from Brazil. So on behalf of the Financial Times and Moral Money, if there's stuff happening, tell us about it. We'd like to hear about it. And in the meantime, I very much wish you all the very best of luck in charting a way through this very confusing world. And I just hope you come up in Brazilian or Portuguese with a much nicer acronym than ESG, because frankly, we need a bit of Brazilian flair to be brought into this whole world pretty urgently. Thank you.
Great opportunity for Brazilian companies, so thank you very much.
Thank you. Thank you. Obrigado.